Welcome back to your weekly market outlook. This is for the second full week of trading in January. This is the 15th of January 2024. Wow, time really does flies. We're halfway through the month of January. All right, let's take a look at the inflation numbers from the US last week. And this is something to talk about. Let's break it down. Headline inflation year-on-year CPI that went up from 3.1 to 3.4%. Forecast was for a little bit of a jump to 3.2%. The core CPI in terms of growth stable at 0.3%. The core CPI year-on-year does come down a little bit, expected to drop from 4% to 3.8%. We got 3.9%. Monthly growth for the CPI is up from 0.1% to 0.3%. Now, let's talk a little bit about these numbers, because no matter how you look at the numbers, we are actually looking at inflation picking up again in the US. Sure, the core CPI does come down a little bit, but it still comes in a little bit higher than what the market's consensus is. The headline inflation number, which is what the market is focusing on last week, was up from 3.1 to 3.4%. This is 0.2% above the consensus. So obviously we're looking at a little bit of a pickup in terms of inflation. Now, this kind of correlates to what the FOMC is saying in terms of keeping interest rates higher for longer. And I think that would be the case scenario. Personally, I don't think we could actually get a lot of rate cuts in 2024. And personally, this is my own opinion. I think, and I'm gonna stick to that since last year. I think market has been overpriced. They've been pricing in too many rate cuts in 2024. So I don't think we are actually looking at a quick rate cuts to happen within the first 6 months, or subsequently after that. Are we going to get a lot of rate cuts? I don't think we are actually going to be looking at that, because technically, if we look at the fundamental data that we have for the year 2023, we actually saw inflation picked up in the past 3 months towards the end of 2023. So in terms of quarterly CPI increase, we actually get a little bit of an increase in the last quarter of 2023, right? So that's from the US. And I think in terms of market expectation, for now, looking at these numbers and looking at the previous NFE numbers that was released this month, we're kind of gearing towards more of a stronger US dollar in the coming weeks, because it does take time for this fundamental to kind of kick in, and then we have to go through the initial market sentiment that goes on in terms of whether or not they're actually going to be adjusting their interest rate cuts for 2024. We'll see. But again, just as a reminder, in terms of official confirmation from the FOMC, from their dot plan, from their economic projections, they are expecting a 75 basis points cut, but market was pricing in for a 150 basis points cut in 2024. So that's double than what the FOMC is officially confirming. All right, now we have the Australian CPI numbers last week as well. We do see quite a significant drop from 4.9 to 4.3%. This is below the consensus. But yeah, it doesn't have that much of an impact. And when we take a look at the technicals there, we're still looking at a little bit of a confusion, I guess, in the market in terms of what's going on with the numbers here. All right, the PPI numbers does come in a little bit softer in terms of the monthly growth. We actually have a negative 0.1%, and that was also the same thing as the previous month. It was actually revised down to negative 0.1%. In terms of the core PPI growth, it remains flat at 0%. Market was expecting a little bit of a pickup to 0.2%. All right, so what's in store for this week? We have the full year GDP for Germany on Monday. We have the Canadian inflation numbers on Tuesday. And on Wednesday, I think we're going to be looking at a lot of movement in the market. First of all, we have the yearly GDP growth for China. GDP growth for China is expected to pick up from 4.9 to about 5%, which is, I think if that happens, that would be good. It would stabilize a lot of the risk sentiments in the market. And we also have the industrial production numbers. Industrial production numbers expected to drop down a little bit, but it's still going to be about 6%, from 6.6 to 6.3%. And we have the UK inflation number. UK inflation number is expected to drop. I don't think it's expected to drop too much. from 3.9 to 3.8%. We also might get a potential for the inflation to not drop at all and stay stable at 3.9%, or even pick up to 4%. But yeah, the focus would be on the UK inflation numbers, which is going to be on Wednesday. And then we have the retail sales numbers coming out from the US, expecting a little bit of an improvement from 0.3% to 0.4%. And then we have the Japanese inflation number. Now we have the Tokyo CPI numbers last week. We saw a little bit of a drop in that inflation number here. Again, we are kind of expecting a little bit of a drop from the previous 2.8%. This is the yearly CPI, by the way, the headline inflation number for Japan. So it'll be interesting how far it drops below the previous number. The current forecast is at 2.6%. But again, look, if for the Bank of Japan to be able to move away from negative interest rates, they need to maintain a higher inflation number. So we'll see what happens from this one here. I think this would be a little bit of a trigger for those Japanese yen traders again on Friday. Also, we have the UK retail sales number and the UOM consumer sentiment numbers from the US. And that's pretty much it for the fundamentals. So let's take a look at the technicals here. First of all, let's discuss the Aussie USD first. We're kind of expecting a little bit of a range bound market condition. I was expecting a little bit more of a potential breakout, considering we have that higher CPI numbers coming up from the US. But we can see from the chart here in terms of the technicals, sure, it does have a little bit more of a downward pressure, but the fair value gap that was formed in December 12, that still holds, and that pretty much caps the market from progressing any lower to the downside. So we're currently looking at that level at about 66.50 level. That would be the immediate support level. The current price is pretty much at about 67 cents at time of recording. In terms of resistance, we have a little bit of resistance at about 67.25, 67.30. Downward pressure is still there. I think we're expecting market to be pressured a little bit lower, but the consideration here is that we bounce off that fair value gap twice in the month of January, so that would actually be a stronger support for now. It's been tested twice. It'll be interesting to see if the market is attempting to potentially retest that level again. That level is going to be at 66.50. Right. For the Euro USD, we do see a little bit of a whipsaw going on there when the CPI number was actually released, but it is still being capped by 1.10 in terms of support. We're still holding strong at 1.09. I think the immediate support or the immediate key level to watch out for is actually 1.0950. Any progress below 1.0950 early this week, that would indicate the potential push lower for the Euro USD towards 1.09 and potentially towards 1.0850. In terms of key resistance to the upside, we only have one at this point in time. It's going to be 1.1, and that's actually going to be a very strong resistance for the Euro USD. So we're keeping an eye on this one here. If you're thinking of shorting the Euro USD, make sure your stop losses are above 1.10. If you're thinking of targeting 1.10, make sure your target level do not exceed 1.10, because at this point in time we do expect a potential more setting to come in at about 1.10 on the pound on the Euro USD. The pound USD, last week I mentioned this is actually going to be one of the tougher currencies to trade, and the reason being it was actually in a very small range. We can take a look at this one here. The outer block pretty much capping it about 1.2750 kind of still holds. We are opening the market with a gap to the downside. In terms of the pivot for the weekly, it is slightly below 1.2750. So we are actually on the upper end of the resistance for the pound USD. So I think there's actually a lot more potential for this one to come back and potentially test 1.27 support. We break 1.27 support, then the next up would be at about 1.2650 all the way down to 1.26. It's still not going to change much in terms of how to navigate the pound USD. This is still going to be one of the tougher currencies to navigate. Obviously, we have the UK inflation number that would actually, provide us with a little bit of an insight in terms of what the market sentiment is. But right now, the positioning for this one here, I think a lot of traders are probably attempting to short this one because it's closer to the resistance here, pretty much at about 1.2750 for the pound USD. RSI momentum wise, the divergence hasn't changed much. We're still looking at that regular bearish divergence for the pound USD, and in terms of momentum, it is currently flat. It is kind of range bound between 50 to 60 on the RSI. All right, next is the dollar Japanese yen. For the dollar Japanese yen, key resistance 146 place. a huge part in terms of capping the market. We didn't see any further progress on that one. We do see a little bit of a spike above 146 pretty much during the release of that CPI numbers, but market kind of immediately just reversed on itself. It's currently trading about 145, and 145 is definitely the key level to watch out for, because the range in terms of the resistance range is actually going to be 145, 146. If it's unable to go back inside 145 level today on Monday, then there are actually much higher probability for this one to track even lower towards 144, 143.50. Just to keep in mind though, the chance for the Dow Japanese to actually break through above the Ichimoku cloud pretty much has passed. We have a very thin Ichimoku cloud on Thursday and Friday last week, but you can see how it is right now. The market has opened still traded below the Ichimoku cloud, and I'm purposely showing you the thickness of the Ichimoku cloud itself. But pretty much going into the month of February, we are actually going to be looking at the Ichimoku cloud pretty much at about 143.50 to 146. So there's actually going to be a lot more sideways condition that could be in play for the Dow Japanese yen. So just keep that in mind if you're trading the Dow Japanese yen. In terms of volatility, the range are still pretty huge. All right, next up, last one. For gold, we have that bounce from the fair value gap. Again, that fair value gap we talk about, that's between 2000 to 2020. This was also formed in the 13th of December 2023, and that still acts as a little bit of a support for gold here. Now, obviously with gold, the thought for this one here is that the FOMC, if they were to keep interest rates high for longer, that would actually be negative for gold. But we can see in terms of the sentiment in the market here, we do see a little bit of a whipsaw. But what makes this a little bit interesting is that there is more conflict developing in the Middle East right now. Obviously, we have the US and the UK airstrikes to Yemen, and that does prop the gold a little bit. I don't think the main focus is actually in gold. I think the main focus would be more on oil, but it does play in terms of the safe haven assets. I think we do see a little bit of support for gold here. But I guess for this one here, we are pretty much still in a range bound market condition. We got support at 2000, 2020, a little bit of immediate resistance at 2050, and beyond that, we still have that 2070 and 2079. And positioning for this one here is actually within the Ichimoku cloud, so this one here is a little bit tricky. It is going to be a little bit risky. In terms of momentum, we didn't see the momentum pick up. It is pretty much stable, still below 60 at this point in time. So yeah, we could actually see gold traded within the range of the pivot and potentially towards support 1. That's also where the fair value gap is located to 2020. So right now, this week, in terms of key support, I think we're still going to be eyeing for key support at 2020, immediate resistance and a key resistance pretty much at 2050, and beyond that, 2070, 2079. I do expect for this week for gold to be traded within the Ichimoku cloud, because if we manage to pass the Ichimoku cloud this week, next week is a little bit of a breather. I think next week, if it still stays above 2020, we could see a little bit more momentum building up for gold. But I think that would actually have to wait until next week. So that's pretty much it for this week. Good luck for your trades, and I'll see you soon.